Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial jargon that the big companies throw at us. Today we're diving into the profit-sharing retirement plan of the Procter & Gamble Commercial Company. And let me tell you, it has got some numbers that might surprise you. So, what is the big deal with this report? Well, it is like looking under the hood of a massive employee retirement plan, a peek at where all that sweet retirement money for Procter & Gamble employees is going and how it is doing. We've got financial statements, investment details, and all sorts of fun stuff. Before we get into the nitty-gritty, if you like getting the real story behind these corporate filings, make sure you are subscribed. And hey, we'd love to see you in our Discord community too, link in the description below. Now, this document is an annual report for a specific employee benefit plan. Think of it as a yearly checkup for the retirement savings of folks at Procter & Gamble. It tells us how the plan is doing financially, what its investments are, and all the important details that folks who rely on this plan need to know. Our main star here is the Procter & Gamble company, a giant in the consumer goods world. This report is specifically about one of its retirement plans, the profit-sharing retirement plan of the Procter & Gamble Commercial Company. It covers the fiscal year ending the 30th of June, 2025. Let's jump straight into the numbers. This table shows us what the plan owns and what it owes. Essentially, its net worth. As of the 30th of June 2025, the total net assets available for benefits were a massive $96,264,266. That is a huge pile of money set aside for employee retirements. Now, what makes up this big number, a huge chunk, over $95 million in 2025, is in participant-directed investments. This means employees have a say in where their retirement money is invested. It's pretty cool that employees get to make these choices. A significant portion of these investments, $31,450,087 in 2025, is in Procter & Gamble's own stock. That's about 32.9% of the total investments. Now, this can be a double-edged sword. If P&G does well, these employees do really well. But if P&G stock falters, it has a big impact on their retirement nest egg. This is a classic situation where the fate of the employee's retirement is tied closely to the company's performance. Another big player here is mutual funds, totaling over $63 million in 2025. This diversification into mutual funds helps spread the risk beyond just one company's stock. Next up, we've got the statement of changes. This shows us how the plan's net assets grew or shrank over the year. In 2025, the plan actually saw a decrease in its net assets, going from $100,538,937 at the beginning of the year to $96,264,266 at the end. That's a net decrease of about $4.3 million. Where did this decrease come from? Well, the investment income for 2025 was $7,060,282. That sounds good, right? But then deductions, which include benefits paid out to participants and administrative expenses, were a whopping $12,007,101. So, more money went out than came in from investments and contributions combined that year. Specifically, the benefits paid to participants in 2025 were $11,968,854. That is a huge jump compared to the $4,614,050 paid out in 2024. This indicates a significant number of employees are likely retiring and cashing out their benefits. This isn't necessarily bad. It can be a sign of a healthy plan where people are actually benefiting from it by retiring. However, it does explain the decrease in the plan's overall assets. Now, let's dig a little deeper into the notes to these financial statements. This is where the company spells out the details, and sometimes the most important information is hidden in plain sight. The plan described here is a voluntary defined contribution plan. Essentially, it is a retirement plan where both the company and, in this case, the company itself, contribute money. Employees must be with the company for at least 1 year to join. It is overseen by the Procter & Gamble Business Services Company and audited by big names like Deloitte and Touch LLP. Here is something interesting. Employees don't contribute to this plan. The contributions come entirely from the companies. The amount the companies contribute is based on an employee's compensation and their years of service. The longer you've been with the company, the higher the percentage the company contributes on your behalf. For example, if you've been with the company for 15 or more years, they contribute 14% of your compensation. For those with 1 to 3 years, it's 8%. This is a pretty generous way to reward long-term employees. Each participant has their own account, which gets credited with company contributions and investment earnings, and charged with withdrawals and expenses. Participants can choose how to invest their money from the options provided. The investment options include P&G common stock, another company's stock, a common collective trust fund, and various mutual funds. As we saw earlier, P&G stock and mutual funds are the biggest slices of the pie. It is also interesting to note the vesting schedule. Employees become 100% vested, meaning they fully own the money in their account after 3 years of service. That's a pretty standard and fair time frame. This next section talks about how they value all these investments. They use a framework called the fair value hierarchy, which basically means they prioritize using real market prices when possible. For most of their investments like cash, common stocks, and mutual funds, they are using level 1 inputs. This means they are valued using unadjusted quoted prices from active markets. So that $46,586 in cash as of June 2025 is valued at its straightforward market price. The common stock, both P&G and JM Smucker, is also valued at level 1. This means they're using the real-time stock prices from the exchanges where they are traded. The common collective trust fund is valued a bit differently, using its net asset value. This is common for pooled investment vehicles and is still considered a reliable fair value measurement. This section highlights transactions that might seem like conflicts of interest, but are actually common and permitted in retirement plans. For example, the plan investing in P&G stock or using services from entities related to P&G, like their trustee or record keeper. These transactions are closely scrutinized and must be in the best interest of the plan participants. As of June 2025, the plan held 197,402 shares of P&G common stock with a cost basis of over $15 million. This again shows how intertwined the plan is with the company's own stock performance. Finally, we arrive at the schedule of assets, which is essentially a detailed list of everything the plan holds. This is where you see the specific mutual funds and their values. We see cash in the Banco Popular and the Northern Trust Short-Term Investment Fund, valued at $46,586. And there it is again, the Procter & Gamble Company's common stock, valued at $31,450,087. Under mutual funds, we see a significant allocation to Vanguard funds, like the Vanguard Institutional Index Fund totaling over $21 million and the Vanguard FTSE All World ex-US Index Fund at over $5 million. This shows a global diversification within the mutual fund holdings. So, what's the big picture here? Procter & Gamble has a substantial retirement plan for its employees, and they are playing a significant role in its investment strategy by offering their own stock as a primary investment option. The plan experienced a decrease in overall assets in the most recent year, largely due to a substantial increase in benefits paid out, which can be seen as a sign of employees reaching retirement and cashing in. The diversification into mutual funds, particularly with a reputable manager like Vanguard, is a smart move to balance the risk inherent in holding a large amount of company stock. Looking at the direction of the company from this filing, it appears they are committed to supporting their employees' retirement. The company contributions based on salary and service are a strong incentive for long-term employment. However, the heavy reliance on P&G stock is a key risk that any participant should be aware of. A downturn in P&G's performance could significantly impact retirement savings. On the flip side, a booming P&G stock can lead to substantial gains. The increase in payouts suggests a maturing workforce reaching retirement age, which is a natural life cycle for such a plan. There are no glaring red flags that suggest mismanagement, but participants should always monitor their investment allocations and understand the risks tied to company stock. Alright, that is our breakdown of this employee benefit plan filing. What is your take on these numbers and what they signal for Procter & Gamble employees? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.